प्रेजेंटेड बाय ईबिक्स कैश। हर खुशी के लिए काफी है।
Hello and welcome. You're with us here on Business Today. I'm Abha Vakaya. Here are the headlines tonight. Markets in the green after across-the-board buying. All sectoral indices in the green as Sensex up 477 points. Nifty closes above the 17,200 mark. Markets regulator SEBI tightens rules for IPOs, restrictions on stake sale by shareholders, anchor lock-in period to be increased to 90 days from the current 30-day period. The last IPO of the year lists with a bang. Priya Life Sciences starts trade at a 53% premium to issue price, closes at 390 rupees. Deadline for filing IT returns likely to be extended again. Persisting problems in IT return and fresh COVID restrictions could force the government to extend the December 31st date. Yellow alert sounded in the national capital. Restaurants to function at half capacity. Cinema halls, spas, gyms ordered shut once again. Stocks reflect depressed sentiment. Markets continued their winning streak for a second straight day with buying seen across the board. Sensex jumped 477 points to end above 57,800. Nifty too managed to close above 17,200, gaining 147 points. All sectoral indices were in the positive. Volumes, however, fairly thin given it's the end of the year. Top gainers including Sun Pharma, Asian Paints, Ultratech, M&M and NTPC. There were only two losers on the Nifty today, Power Grid and IndusInd Bank, with some minor losses there. Broader markets also outperformed, ending another session with decent gains. The government may well be forced to extend the deadline for filing income tax returns again. The current deadline is just 3 days away, and the Central Board of Direct Taxes has received multiple requests for giving taxpayers more time to file their returns.
Just days before the deadline for filing income tax returns for the year 2020-21 ends, the clamour for another extension is growing. And it is the social media where people are letting their thoughts flow, letting their angst out. Twitter is overflowing with requests and barbs in equal measure, with taxpayers asking for extra time to file their taxes. While the Income Tax Department said that an estimated 46.7 million income tax returns had already been filed till Monday. In response, a Twitter account under the name of Rahul M. Maheshwari wrote that this was very low compared to last year, with almost 50% lower returns filed due to constant glitches and a non-responsive server. Another user wrote that over 39 million returns were pending as of today. Tax practitioners complain ITR forms 5, 6 and 7 are still prone to glitches. Ongoing COVID shutdowns in some states may further hinder filings. The government had already extended the last date from 31st of July to this month end because of COVID. Unless extended, the only option for late filers will be to fork out a fine of 10,000 rupees and file their return by the 31st of March. This report filed by Karishma Asudani for Business Today TV.
Let's go across to my colleague Karishma Asudani. Karishma, is there another extension on the cards? What are your sources telling you?
Well, right, considering the amount of requests that has been coming from the users, the individuals, and of course the chartered accountants, sources tell us from Finance Ministry that the option of extension is on the table, but there is no final call yet taken. In fact, quoting a source who also said that on an average they're receiving 1 lakh ITR applications in an hourly basis, and that makes it a confident way out for the government to see that people are taking the deadline seriously. But keeping in mind the technical glitch with the portal, there is likelihood that the government could take this call, but coming in from sources, no final word as of now. In fact, the income tax also tweeted on Twitter that about more than 4.60 crore ITR applications have been submitted. Yesterday, netizens all over Twitter were requesting the government to extend the deadline by some time, keeping in mind the distress that the pandemic has given and also the technical glitch that has been caused. This is going to be a further second extension deadline because it was in the month of September that government gave a further extension until 31st December 2021, and now we need to wait and watch if the government is going to consider yet another extension on the basis of these requests that have been pouring in.
Thanks, Karishma. Senior tax advisor and former president ICAI, Ved Jain, joining us now on the story. Mr. Jain, crucial, of course, to get a sense of whether or not we're going to see an extension. What do you feel is the primary reason? Is it again tech related? Are there other factors that the government is possibly taking into account?
See, in the due date normally is 31st July.
Right.
And looking to the issues which have come in the month of July on the portal, the government then extended it to 30th September and then it was further extended to 31st December. And we all know that this portal has started a little bit functioning only in the last 1.5 months only.
Right.
And as per the feedback which is coming from the various offices of the chartered accountant and the people who have been filing return, there continues to be some teething problem as on date also. Now the new portal which has been, which is called a second generation portal, you have to revalidate your signatures or digital signatures. There are challenges which is coming up on revalidation. Then what the field of people are telling that OTP which is required for verification of the return is not generating, and it is taking a lot of time in filing a return, and multiple times when you try to file the return you get success out of 10 only once or twice. So that's a challenge which has come up on the issue. And the third challenge which people are facing is the matching of the data, which the revenue and CBDT says that your return should match with 26 AS, and also the summary of which AIS information they have put in. So they have, of course, have a drop-down window, active and non-active, but still challenges are coming up on how to validate and how to reconcile those figures. So those are the challenges coming up. Now, in this scenario and background, see what is happening is that it is correct that the CBDT is saying many people have filed the return, but at the same time, it cannot be said that everybody has been able to successfully upload the return. So there are challenges coming up. And now in the last week, as you see, as the Omicron threat has come up, now there in Mumbai, there is some restriction. In Delhi also there is a restriction, yellow alert has been given. So the functioning has also come to a little bit, I think, not a standstill, but the function has gone down on that part. So looking at all these aspects, there are reasons that some extension should be given. But I'm also with the CBDT that in case they extend it in the beginning itself, then people take it lightly and then again they wait for the last date. So what I believe that the thought process may be let people file the return to the extent possible, maybe by 29th or 30th December, and then they take a call to extend the period by 7 to 10 days, those who have not been able to file the return. So one way it is correct, yes, now portal is functioning to some extent, but at the same time, the taxpayer and chartered accountant on their part are also correct to say that period need to be extended as they had not got the due period. See, normal period given for filing return is 4 months from 1st April to 31st July.
Right.
And we all know that this portal has started functioning somewhere in the first week of November only. And then still there are challenges. Data is not being uploaded, OTP is not being generated, even the audit forms are not being uploaded. So these are the challenges which is continuing. So somewhere a balance has to be struck, some period has to be extended. And as you rightly said, the sources are indicating, yes, probably there may be an extension for maybe 7 days, 10 days or 15 days, depending upon the situation developing in the next 2-3 days. Also taking into consideration the threat of this Omicron and the pandemic going up further.
All right. So you're saying that despite the fact that the portals only really started to work efficiently in November, the extension will be only about 7 to 10 days, according to what sources are saying right now.
Yes, that you are right. Okay. I think that's an extension. Maybe 15 days. It can be at some time.
All right, Mr. Ved, we'll leave it there. Thank you so much for joining us and taking us through some of the reasons behind that delay in filing returns. Markets regulator SEBI has tightened norms for IPOs. Even as 2021 turned into a record year for IPOs, SEBI in its meeting today addressed fears related to recent public issues, particularly of new age companies. Shareholders with more than 20% stake in a company have been barred from selling more than half their stake through the IPO. Companies will have to be more clear about the purpose of the IPO proceeds in their prospectus, and the use of funds will be tracked by rating agencies. SEBI has also increased the lock-in period for anchor investors to 90 days from the current 30 days. According to SEBI, this will prevent a run on the share as witnessed in the cases of Paytm and Zomato stocks. The regulator has also set a limit for the difference in the price band of IPOs. New rules will be applicable from April 2022. 2021 was the year of IPOs, a year when venture capitalists booked profits from startups and retail investors got introduced to new age companies. 2022 promises to be just as exciting. Lots of IPOs are opening next quarter, including the one many are waiting for, the great Indian IPO of LIC.
The question everyone is asking, was Dalal Street touched by Midas this year? Why did many IPOs do so well? India Inc. raised a record of 1,18,000 crore rupees through 63 IPOs in 2021, nearly 4.5 times the amount raised in 2020. Just a little over 12,000 crore was raised in 2019. The rush promises to continue next year, with listing day gaining attracting retail investors to the market. More than 15 companies have filed their prospectus with the intention of raising funds in the January-March quarter. But the real game changer will be the mega IPO of LIC, in which the government plans to divest some of its holding and raise funds to plug the deficit in the budget.
It's coming at a time when still a lot of PSU stocks in the listed space are commanding a poor valuation multiple. So therefore, I have my own fear, but of course, a lot of push can be given, and the policyholder also can subscribe. So what would mean for the market is that there would be definitely a pressure for the market if this issue succeeds within the current financial year.
Around 32 companies have already been allowed to raise 47,000 crore rupees. Another 33 companies have filed applications with SEBI to raise an additional 60,000 crore. However, the Omicron variant and a resurgent COVID may play spoilsport. There are also concerns that high inflation may force RBI to increase interest rates early next year, a move which is likely to depress market sentiments.
Venture capital funds wait for a longer time to make profits, and then they come to the primary market and listed space. Here, some of these, not all, some of these e-commerce companies are rushing to the market before the venture capital chain is complete, in the sense before they could prove their ability to make profits.
Investors will in all probability remain engaged given the pedigree of companies in the IPO pipeline. These include NSE, Adani Wilmar, Ruchi Soya and MobiKwik, among others. And the fact that IPO returns are among the highest may also be the hook. Bureau Report, Business Today Television.
Priya Life Science has started the Dalal Street journey on a high note. It was a blockbuster debut for the API manufacturer as its shares listed at a premium of 55%. The listing gains met investor expectations. This after IPO was hit among investors. Post-listing, the market capitalization of the company stood at 3,420 crore rupees. The company raised 700 crores through the IPO. The net proceeds will be utilized towards capital expenditure requirements, repaying of debt and general corporate purposes. That was a successful listing of Priya Life Sciences. It's been a roller coaster ride for the commodity market this year. After robust gains earlier this year, gold and silver have lost sheen as we wind up the year. Will the bearish sentiment around precious metals lift in 2022? Let's deep dive into our Commodity Corner segment with our special guest, Mr. Gnanashekhar joining us now. Great to have you with us, taking a look at commodities, the trajectory, outlook going forward in 2022, and so many moving pieces as we enter the new year. Mr. Gnanashekhar, let's start with precious metals, gold and silver. Gold versus silver. What do you feel is going to outperform in the new year, and do you really feel we'll start to see a real move towards precious metals while there continues to be a lot of speculation around the same, given inflation concerns as well?
I think you hit the nail on the head. Inflation concerns are the main triggers or other tailwind for precious metal market going forward in 2022. During inflationary times, generally investors tend to pile up on precious metals, both gold and silver, and more of silver because silver has the potential to give higher returns compared to gold. I'll come to that later, but basically, because of this nature of it being a safe haven during inflationary times, both gold and silver are expected to perform extremely well in 2022. But having said that, you could have some negative surprises on and off, some retracements on and off, because of the higher interest rates that are going to lead to dollar strength and that having a negative effect on precious metals. But I think it's only going to be time to time. It's not going to be a negative trend for precious metals as a whole. So I'm quite bullish on precious metal going forward.
And what's the kind of upside you're looking at, particularly on gold in 2022?
In 2021, I think it's sort of given a negative return of roughly minus 5%. Natural because markets have been pricing this interest rate hike. And also a lot of stimulus that led to risk assets like equities doing very well, and market participants abandoning gold and silver. That's one of the main reasons why we saw 2021 for gold being a slightly negative sort of year. But I think in 2022, looking at the tailwinds and looking at the positive factors that could sort of help it take off. I think a positive return of somewhere close to 7 or 8% is quite likely. It's our own personal forecast, and for silver, the returns are going to be much higher. If normally the way it moves is that if silver moves by 10%, gold moves by 10%, silver moves 2 times that, at least 2 to 3 times. So that's the kind of potential.
Okay, and what about industrial metals then? It was a year where we saw a lot of action on that front. Is that something you see continuing into the new year?
I think so, but there are individual metals, and each metal has its own fundamentals. In 2022, thanks to the stimulus, I think funds interest in industrial metals picked up. And also thanks to the huge demand post-COVID and some supply issues that creeped in by way of logistical issues. All that magnified this rally that we saw in metals, industrial metals, or we call it the growth commodities. But I think in 2022, the supply demand will now start catching up for these metals. We've had a lot of supply issues supporting prices last year, but that might not be the case going forward in 2022. These high prices will only encourage miners to increase capacities in 2022 and even going forward. But having said that, it's not easy to increase capacities overnight because there are a lot of environmental issues and all that. But I think the supplies will return, and the market will be more balanced in 2022, not like what we saw last year.
Okay. Have to ask you about crude as well, Mr. Gnanashekhar. What a year it's been, and I see some reports predicting even higher prices, and still awaiting commentary, of course, from OPEC Plus on supply and monitoring the Omicron situation very carefully. But it's bound to lead to some kind of volatility and speculation. What can we expect on crude?
I think the Omicron situation clearly has more or less been factored in, with the reports that have come in so far and the fatalities being less. It has led to some amount of confidence back to, the energy markets as a whole. But then, most of these flights getting cancelled and the restrictions in many countries, that sort of could put a cap on demand in the near term. But having said that, the overall picture still looks very good as far as crude is concerned.
All right, Mr. Nyanashekhar, thanks so much for joining us and taking us through the outlook for commodities in 2022. Great speaking with you.
Thank you. Pleasure.
As Delhi government announced new restrictions amid a rise in COVID cases, the shares of multiplex food and beverage companies slipped, anticipating imposition of similar restrictions by other states as well. The shares of PVR fell the most, losing over 4% in trade, with returning to normalcy looking like a far-fetched dream. Currently, PVR has 25 plus screens up and running in Delhi itself. Shares of Inox Leisure too tanked post the announcement but made a recovery later to close on a flat note. However, the impact on F&B stocks may be limited as online orders could see an uptick. But shares of Burger King, Jubilant Foods all witnessed a knee-jerk reaction. Outdoor dining may take a hit as we see an uptick in COVID cases. In a major move, India has cleared 2 more COVID vaccines and an antiviral drug today. The 2 vaccines approved are Corbevax by Biological E and Covovax by the Serum Institute of India. An antiviral drug, Molnupiravir, developed by Merck, will be manufactured in India by a consortium including Dr. Reddy's, Cipla, Torrent Pharma, Sun Pharma and Mylan. This takes the total number of vaccines approved by the government to 6. The clearance comes just days after Prime Minister Narendra Modi announced vaccinations for children and booster doses for frontline workers and the elderly. The government rules that Codriver airbag is mandatory for all passenger vehicles starting January 1st. There will be no further extensions or deferment of the date for the co-passenger airbag rule, according to a top government official who told Business Today TV. Currently, only driver airbags are mandatory in passenger vehicles in India. India accounts for nearly 10% of all road crash victims globally, as per a recent World Bank report. Thus, this move will prove to be beneficial for Indian travellers. Reliance Industries and Tata Group have invested in Karkinos Healthcare. This institution is an oncology startup led by former Tata Trust CEO R. Venkatramanan. Reliance, through Reliance Digital, has acquired a minority stake, while the Tata Group is investing 110 crore rupees. Tata Group promoter Tata Trust has been sharpening its focus on oncology in recent years and has been ramping up cancer care centres in the country. Apart from Ratan Tata, TVS chairman and Tata Trust trustee Venu Srinivasan and Infosys co-founder Chris Gopalakrishnan have also backed Karkinos. Upgrad co-founder Ronnie Screwvala, Paytm founder Vijay Shekhar Sharma and Ola co-founder Bhavesh Agarwal are also investors in the business. That's where we leave it on the show today. Thanks so much for watching.